Hi there, I'm Mike Staton, mortgage advisor at Staton Mortgage and Protection Specialists, and I'm here to talk to you about something that's been in the news only as early as last week, and it's Boris Johnson announcing that he's going to actually look at discussing with the banks a way to use housing benefits as a form of measuring affordability with different lenders. Now, this is my first Facebook Live in nearly 2 months. Quite a lot of you might be aware that I was in a serious car crash at the beginning of April, end of March. So I took some time out, realised that there are sometimes more important things to life than working every single day. And I've been using the last 2 months to spend my time with my kids and the missus and do the things that we enjoy to do as a family. But I want to get back into my Facebook Lives again, and I thought, what better way than to discuss a topic that everybody is talking about at this moment in time. And I'm hoping to get back into doing one Facebook Live a week, discussing all these important topics that everybody wants to talk about. I've already had a few queries, quite a few work queries at work, and so have my other advisors, and they all want to know when a benefit is going to be allowed to be used to form part of affordability. So already it's quite a confusing discussion to be having, because whether Boris Johnson knows it or not, government benefits have been used by lenders ever since I was a mortgage advisor, and quite possibly before that. There's a list of benefits that a lot of lenders will accept. You've got attendance allowance, bereavement support, carers allowance, child benefit, child and working tax credits, universal credits, employment support allowance, personal independence pay, and pensions credit. So benefits are not a new thing when assessing mortgage affordability. And if you have ever ever avoided going for a mortgage appointment or avoided applying for a mortgage because you think you're on benefits and you won't be accepted, then think again. I mean, Staton Mortgages, for example, we've got access to over 100 different lenders on our panel, with access to many exclusive mortgages. We regularly do mortgages for people and use their benefits to top up affordability, and that is the most important thing. We're talking about topping up their affordability. Now, the housing benefit that people are talking about, if somebody is only in receipt of housing benefit, it more than likely won't be enough to get you the £300,000 mortgage that you want. For me, the most important thing is knowing the rules at the moment. So when assessing affordability, albeit some lenders will accept benefits, not every single lender will. Some lenders will accept 100% of benefits, some lenders 60%, some lenders 50%. Some lenders will downright refuse to assess any affordability, which includes benefits. So some lenders will decline benefit income. So the job for you is knowing which lender or which lenders will accept the benefit that you receive and how much of that benefit that they will factor into affordability. What I would say is, don't start doing agreement in principles with your banks to see if they'll accept it, because an agreement in principle could leave a footprint on your credit file, and if you leave a footprint on your credit file, it could be detrimental to your credit score. This is where your mortgage brokers and your mortgage advisors really come into their element. It's their job to know and understand the criteria of every single lender that's on their panel. Now, you have got to be careful with your selection in mortgage brokers. Some mortgage brokers will have access. For instance, I used to work for a large estate agency group, and I only had access to I had access to 23 different lenders on my panel when I worked with that estate agency group. Now, compared to the 100 lenders that I've got on my panel now, it's more than likely that I'm going to have more lenders on that panel that will accept benefits and will carry out a higher level, higher income multiples. Yeah, so some lenders, some mortgage brokers have access to 23, some brokers have access to 40, 60, 80, 100, etc. So when you find your mortgage consultant, there's no point in asking the question, are you independent? Are you a whole of market? The most important question that you're going to ask your mortgage broker is, how many lenders do you actually have on panel? Because if you've got 2 mortgage brokers in your area, one offers 60 lenders on panel, one offers 100 lenders on panel, the likelihood the likelihood is the one with 100 lenders is possibly going to be able to get you, the odds are in his favour or her favour to get you the better mortgage. Doesn't necessarily mean they will, but the odds are there in their favour. So with benefits, every lender will have a certain set of rules for how benefits are calculated. So for instance, child benefits, there's one lender out there that says, yes, we'll use them, however they must be factored in, that you must be in receipt of them for the full term of the mortgage. Now, if you're applying for a 35-year mortgage and trying to use child benefit, the likelihood is you're not going to get child benefit for the next 35 years, because when your child turns 16, 18 or 21, whatever, when they're no longer financially dependent on you, that benefit is going to stop. So therefore, you're not going to meet that lender's criteria. They won't factor that child benefit into account. Child maintenance, for instance, some lenders will say it needs to be court ordered. Some lenders will say they only need to see 6 months bank statements. It might not need to be court ordered. You might have a mutual arrangement with your ex-partner. And that ex-partner, that ex-partner might not have needed to have a court order, might just be paying them. But some lenders won't accept that. Some lenders say, unless there's a court order, we're not going to accept it. Employment support allowance, again, some lenders will accept it, some lenders won't. Carers allowance, some lenders will accept it, some lenders won't. Some lenders will accept disability living allowance. Some lenders will say it has to be in your name. Some lenders will allow you to have it if it's in a child's name. Again, different lenders, different criteria, different rules. The most important thing is, again, when choosing your mortgage, you don't shop around on interest rates, you shop around on the criteria, you shop around on the lenders that are going to accept you. It's all right having a 0.99% interest rate to apply for, but if you're trying to do it with a £12,500 salary, child benefits, child working tax credits and universal child working tax credits and personal independence pay, and that lender does not accept it, you ain't getting that interest rate. So the most important thing that I would say is, if you are applying for a mortgage and you want to maximize your affordability and you do have benefits that can potentially be used on a mortgage application, then speak to a mortgage broker. Your mortgage broker is the most qualified person that you will speak to in regards to obtaining the right mortgage for you. So I don't know where Boris Johnson has been for the last 10 to 15 years, but I can tell you that benefits have been being used. It isn't a new thing. Lenders will accept the vast amount of benefits that are on there. I personally think this is lip service. I think it's something that has ironically came out just straight after the vote of no confidence, and he wants to get people's thoughts away from that. He wants to get people back onto thinking that he's on their side, and I'm not saying whether he is or he isn't. My political opinions, I have no interest in broadcasting them on here, but the most important thing is, it isn't a new thing. Don't shy away from it if you've got benefits. A good mortgage broker should be able to place your mortgage application, as long as you are being realistic and your deposit is there. You should be able to get a mortgage within your means, as long as you meet the lender's criteria, the lender's affordability, and then it's down into the hands of your mortgage advisor. I'm looking at doing a couple more videos over the next month. I would like a little bit of a couple of ideas of what you would like to hear about. I have had a couple of questions about the right to buy scheme, and again, Boris Johnson announcing that he's hoping to give people in housing association properties the same privilege or the same chance of getting on the property ladder as council tenants. If that's something that you'd like to hear about, drop me a message on the below. And we can look at doing that next week. If there's something else that you are dying to know about, then give us a shout, and we will happily discuss it. We do have a free mortgage advice group where you do have access to Staton mortgage and protection specialist mortgage advisors. If you've got any questions, you can ping them over there. It just gives you access to the opinion of a mortgage advisor without you having to pay any fees, which I think is great. Pop a question on our mortgage group. I'll provide the link below, and feel free to ask any questions, and hopefully one of our mortgage advisors will be able to give you an answer you want. But apart from that, everybody take care, have a good evening, and hopefully I'll see you next week. Bye bye.